That's a booming economy. Or is it? Many people call Bitcoin digital gold. We would put it in that category, a store of value, a risk-off asset. And last year, during the regional bank crisis in March, Bitcoin shot up 40% as the KRE, the regional bank index, was imploding. And here again, the regional bank index is acting up. We are seeing Bitcoin catch a bid again.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. In this video, Cathie will share her views on the Bitcoin to gold ratio, the Bitcoin ETF, and the non-farm payroll employment. She will address some of the key issues that many people are concerned about, such as: how does the Bitcoin to gold ratio gauge Bitcoin's value and performance during crises? What impact did Bitcoin ETF have on demand, prices, and trader behaviors? How does the non-farm payroll report indicate the U.S. economy's state, and why doubt its accuracy? Let's join Cathie in a conversation about these topics and more.
I'm going to show the Bitcoin to gold ratio. Many people call Bitcoin digital gold. We would put it in that category, a store of value, a risk-off asset. And last year, during the regional bank crisis in March, Bitcoin shot up 40% as the KRE, the regional bank index, was imploding. And here again, the regional bank index is acting up. And after a little bit of a correction, after 11 ETFs were introduced, we are seeing Bitcoin catch a bid again. So this idea that it's a flight to quality or a flight to safety is reasserting itself here.
The SEC approved the first physical Bitcoin ETF in January 2024 after years of rejections and delays. These ETF track the spot price of Bitcoin, unlike the previous ETF that were based on Bitcoin futures contracts. The first 10 physical Bitcoin ETF launched on January 11, 2024, and attracted billions of dollars in inflows. Also, the Bitcoin to gold ratio has fluctuated significantly over the past 2 years, reflecting the volatility and divergence of the two assets. In November 2021, the ratio reached a peak of 35, meaning that one Bitcoin was worth 35 ounces of gold. In 2023, however, the ratio dropped to 15 as gold prices rose and Bitcoin prices fell.
The reason we believe Bitcoin went down after the ETFs were introduced is because there was a lot of anticipatory buying before Bitcoin or the ETFs came out. There was a bit of the sell on the news. These are the trading types who just are very opportunistic in that way. As you know, or if you've been listening to In the Know, 15 million of the 19.5 million Bitcoin outstanding are in what we call strong hands. They haven't moved their Bitcoin in more than 155 days. And this chart just shows you that even relative to gold, Bitcoin has been rising. There's now a substitution into Bitcoin, and we think that is going to continue now that there is a much easier way, less friction-filled way to access Bitcoin.
Cathie Wood is still investing large portions of her wealth in Bitcoin, and she expects that it may reach $1 million by 2025. She has also launched several exchange-traded funds that invest in companies and technologies related to cryptocurrencies. The concept of substitution into Bitcoin, which means that investors are shifting their preferences from traditional assets like gold to digital assets like Bitcoin, has been debated by various experts and analysts. Some argue that Bitcoin offers advantages such as higher returns, lower correlation, and greater innovation, while others contend that gold offers stability, tangibility, and proven history.
The headlines were very strong. Non-farm payroll employment came out at 353,000, and that was nearly double what was expected, 185,000. And even more important, perhaps, if you believe these numbers, is that there was an upward revision to the previous month, 117,000 upward revision to 333,000. That's pretty astonishing. So the 2 months together, December and January, which are very seasonal months, of course, when you combine them, the employment was up 686,000. That's a booming economy. Or is it? Well, household employment. So non-farm payroll surveys corporations, companies, and household employment surveys households and tends to capture more small businesses. So household employment was down 31,000 in January. And the previous month, December, it was down 683,000. So the combination of those 2 months, down 714,000. So which is right?
The non-farm payroll employment report is one of the most closely watched indicators of the health and direction of the U.S. economy, as it reflects the level of economic activity, consumer spending, and income. The report is released monthly by the Bureau of Labor Statistics and is based on a survey of about 122,000 businesses and government agencies. Also, the non-farm payroll employment report can have a significant impact on the financial markets, especially the stock, bond, and currency markets. A higher-than-expected number of jobs added can signal a strong and growing economy, which can boost the stock market and the U.S. dollar, but also raise the expectations of inflation and interest rate hikes, which can weigh on the bond market. A lower-than-expected number of jobs added can have the opposite effect. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.